Hello, everybody. I am Joe Gallimore, Director of Investment Management with Argent Bridge Advisors, here to bring you another Cup of Joe. So obviously, the events of the last 2 weeks have caused major changes in stock markets. The unprovoked war on Ukraine has increased volatility significantly. Funny enough, the day after Russia invaded Ukraine, major market indexes had one of its largest intraday swings since the COVID crash of March 20, but ended that day and the following day in positive territory. And since then, the market has been up and down as investors struggle to digest what the developments of this war mean for stocks and the economy exactly. International and emerging stocks have understandably been affected the most. The sanctions on Russia are having ripple effects throughout the world, mostly on economies that are either most dependent on Russian energy or are sensitive to the cost of oil and gas, which has risen significantly worldwide. One effect on the flip side is after being mostly pushed down by inflationary pressures and looming interest rate hikes, the US aggregate bond index had a meaningful recovery last week. It posted a positive return of almost 1%, which is a very big 5-day move for this asset class. This positive move was caused primarily by a flight to safety from stock investors who were exiting stock holdings and seeking the safety of US bonds. So as the war in Ukraine continues, so will volatility. Worsening conflict will further weigh on stock markets because so far the primary weapon used by the Western powers has been economic devastation of Russia. Naturally, any sort of economic interruption like this will have direct effect on the stock markets. In contrast, any positive news out of this conflict, primarily developments towards any sort of peace, will likely lead to market upswings because investors will be very quick to extrapolate the effects of an implied peace deal. So we are not making any major strategy shifts in our portfolios. In our last newsletter, we shared a chart that showed how the stock market has persisted in growing through and after major world conflicts. I checked all our funds and that we employ, and the exposure to any sort of Russian stocks is very minimal. On the flip side, the portfolios we design for you hold real asset funds, which have certainly benefited from the rise in commodity and energy prices this year. And several of the strategies we use have the ability to hold cash, which is an obvious advantage when the market is correcting and they seek to deploy that cash during buying opportunities when conditions start to improve. So finally, to close, I'd like to acknowledge that while we're here to talk about investment growth and volatility and sticking to your plan, there is a lot of human suffering being endured right now, and we know that that is far more important. It's unfortunate that sometimes it takes the worst of humanity to bring out the best of humanity, but it does warm my heart to see most of the world, and especially the countries neighboring Ukraine, opening their borders, sharing their resources, and especially opening their wallets to help strangers who are in dire need. So if you have any questions, please feel free to reach out to us by email or give us a call, and we will talk to you again soon.